You've seen this before, and it ain't pretty. I'm going to show you where we are at right now in the economy, looking at the details, because number one, Michael Burry just put a big short on. I'm going to show you the complacency that is in the markets, and then I'm going to give you an idea of the cracks that have emerged that we can't step away from. You came here for the truth, so let me unveil that for you. My name is David Quinteri, and what I do on this channel is I show you where the trillions and the billions and all this hocus pocus really is, so that you can be empowered to make the right decisions. I'm not only going to show you some data, I'm going to show you what you got to do. How does that sound? Let's begin by looking at Michael Burry. You know him, the money manager made famous in the book from the film The Big Short, held bearish options against the broad S&P 500 and the Nasdaq 100 at the end of the second quarter. Now, you'll see this before. I think it is important to go through it. You see it with a 13F. They have to file, any publicly traded company is going to have to file 13F. And during these, reports, you're going to see, you will note the buys, the sells, like all the transactions that they have had at that moment. And that is only one moment in time. You don't know what happened before and after and all that. So it is a snapshot, and that gives you an idea of what's happening. But you got to understand Michael Burry, he jumps around. He's got things going on in his head. He is not always short. It's very much a mixed bag. He just got famous for being short. Now, he's also, believe it or not, long on Japan. So you got some odd circumstances happening right here, but we don't know what's going on at this given moment. I just want to highlight the fact that he believes that the markets have been elevated to a point at which they need to come down, at least somewhat. You don't know. 2 weeks later, he could sell that. It's not as if he is super bearish for an extended period. But the point is, it is the equivalent of $1.6 billion. Not that he invested that, to short the markets of $1.6 billion, but it is the equivalent of that in terms of options, okay? So it's a big bet, just to put it lightly, okay? So we see that. What's he talking about? Like, why would he be doing this? That's what we're going to look at, and I can tell you, we've been here before. This is showing us the 2020 and crypto boom, overlaying that with what we're seeing now, which is the AI boom, and specifically with NVIDIA stock. Now, it's just one company, but we get the point here. And that is, we get a little bit carried away. We get ahead of ourselves. There's no question about it. Wouldn't you agree? Even people do it. We do get ahead of ourselves. We think that we're going to do the best of everything. We are going to be able to estimate, I'm going to be there at 4 p.m., let me tell you. And then what happens? Oh, well, I didn't think that was going to take me so long, and this took me much longer than I anticipated also, so now I'm way behind. Just like when you drive into work and you run into traffic, there's an accident, there's something that happens. You got the people who are the rubbernecks. They got to look at the accident that happened. All of these things occur, and we don't know how it's ever going to be until we're in the middle of it. And then it's hard to really determine exactly the direction. Okay, so we are in the midst of this right now, a boom, a spectacular boom, because of what we're seeing with artificial intelligence. Most of artificial intelligence that we've been seeing right now, that we've been testing right now, is really nothing, but we know that we are at the beginning stages of it, so a lot of money is being thrown into it. And certainly with that, we get a lot of speculation. What does that mean? Well, I'll tell you. You look at when we have complacency being high, that failure does result. That's what history teaches us. You got puts and calls, you've got the VIX index, and you've got the fear and greed. These three things, among so many others, that will measure the amount of intensity at which we're experiencing this. And when volatility is super low, when people are saying, I'm going to buy calls, not puts, at the same time, we've got the fear and greed index. All of these three things coming together, which right now are looking so ripe for a setback. It just shows us that usually the market is it's in the exact wrong direction. I should say the sentiment. Oh, everything's going to be A-okay. Just like when markets were down, I said in September, it looks like we could have a near-term bottom at the very least in October. Why? It's because everything was getting ahead of itself. Ahead of itself. Don't be Wile E. Coyote. AI will be at the center of the next financial crisis. Now, it's the SEC chair, not exactly the most reputable individual, but the point is, certainly this is in focus, and there is this wanted need for regulation around AI, and that will slow down the growth that we are experiencing, not just with AI specifically, but the tech industry. With very minimal regulations, it's been allowed to grow substantially, but with even just a few things here or there, if they ever decide to do it, that would really have an effect on the stock prices, at least initially. So pay attention to that. Keep an eye out for any regulations that do come. Here we got it. I want to show you specifically what's happening as an indication of the economy, and that is gold used in technology. According to the World Gold Council, the big drop in demand for gold in tech was driven by weak consumer spending on electronics. And so certainly we are watching this coming in through all of these different avenues. Global trade is down. I've showed you that before. Import numbers, they're down. And so we see that coming up even in gold. If you don't see that demand there, you can pinpoint it in this case here. And unfortunately, that is what's happening right now, where we do have a contraction in the economy. And this is just one small indication. Here we go. We got Wile E. Coyote. I think it's important to look at this and try to address what's happening. The last time we had some of these factors right now, the markets did not perform well. And we're going to talk a little bit about that. 2019, if you remember correctly, the economy was looking weak. Remember, I'm saying this, 2019, okay? The bank crisis began in September. What bank crisis are you talking about? Well, if you've been here for this long, since 2019, you know exactly what I'm talking about. September 2019. Well, we had the repo crisis. Repo crisis started specifically September 17th, 2019. At least that's when the, as I say here, not QE began. And believe it or not, the balance sheet expanded faster. This isn't a time when they're saying it's not QE. The balance sheet expanded faster than QE1, QE2, and QE3 during this period of time. They boosted it up. Then we had March 2020, which was all chaos and everything changed from that point. But everything was sinking down as of 2019. They reversed that, and of course, the rest is history. It was a mess. Don't get ahead of yourself. I'm just going to show you a couple examples within this. Electric vehicle tech maker Proterra files for bankruptcy. If you saw the video before this one, there's just one after the other of very poor performance. They come out with a SPAC. They come out trying to do these IPOs. And of course, it doesn't perform well. This is just one example. Here we go. This is potentially good for those companies in China. China's EV export boom is bringing Southeast Asia into Beijing's orbit. They are doing more deals. And certainly this is one region that is playing ball for the most part. Okay, they want to do business with China. They want to do business with everybody, but at least with China. So that is positive for the Chinese economy, for the different businesses that are involved in this, semiconductors that they are producing as well. And I would think that, for the whole BRICS and everything that's coming out of that, it is a positive development, okay? Then you look on the other side of this. You can see the wild and wacky things that we've been encountering. This is related to the, I don't know what you want to call this, fake meat or cultured meat, as they call it here. A decade on from the world's first cultivated beef burger, a Dutch startup is luring a dwindling pool of investor funds with stem cell technology that can rapidly grow slaughter-free sausages. They use these stem cells. They can grow a pork sausage in 8 days. First of all, that timing is crazy, 8 days, just to think about it. At the same time, they mentioned the dwindling pool. So venture capital right now is like very hesitant. Borrowing costs are much higher right now. In the Amazon space, where in 2021, money was being thrown at everybody at these very high multiples. It didn't matter what you were selling. Here's some cash and have some fun. Now that's changed. So it's the same thing with all these, are you making fake sausages? Sure, I'll throw some money in there. Well, it's not just anybody willing to invest in it, okay? So you get these periods of time when we have excess, and a lot of these things, will they ever, is the customer actually there to buy? The most successful person that I know, he told me, before you build anything, you better make sure you have a buyer ready and waiting. Have your customer already in your pipeline before you go out and produce anything, and that lowers your risk dramatically. Important stuff. Okay, here we go. The cracks have emerged. I want to talk to you about that. Just a couple random examples. The US government will have to write off billions of dollars of student loans from borrowers who have died over the past few years, adding another complication to a system that's ill-equipped to handle the resumption of payments this fall. So September-October timeframe, payments resume, and there's a lot of people. In fact, they're just mentioning here some 300,000 borrowers are estimated to have died since March of 2020 when the pause was initiated. So there you go. Billions of dollars being written off. That means the taxpayers got to foot the bill indirectly. And so we have some problems with the debt, and that goes for student loans, for credit cards, personal loans, all kinds. The Bank of England's pill warns food prices may not fall back from high levels. Food prices are up, of course, inflation is high, and many of these different points within the inflation spectrum are going to remain sticky or elevated. Do not expect them to go down. So you've got the debt situation, and you've got it at higher borrowing costs. Inflation is high, prices are high, all of these different things. So how are you ever going to get around it, right? You've got this concern that I've always talked about, which is when we reward foolishness over productivity, we get a reversion to the mean. And that's really the point that I'm trying to make here, is that you got to watch where these things are, see the risks, and then you address it. Are you interested in knowing, like, what are some examples of things that you should be doing or looking at? I'll talk about that in a minute. I want to highlight more. Chinese regulators have sought for years to get to grips with the $2.9 trillion trust industry, a corner of the country's shadow banking sector that offers bigger returns than regular bank deposits, but can be fraught with risk. All right, so we saw this before. I've covered it before. And unfortunately, there's trillions of dollars worth here that are at risk, just like the real estate industry, just like other problems that China is experiencing. China's finance giant missed payments, alarming regulators and the markets. Several firms saw overdue payments. You got property crisis spreading to the $2.9 trillion trust industry, okay? So this is like one thing on top of another. This is just the concern that some have had, and for good reason, really. What about this? The top lobbying group for U.S. electric utilities is taking aim at the Biden administration plan for stifling greenhouse gas emissions from the nation's power plants, saying the proposed requirements are based on technology that isn't ready for prime time. Okay, so I've showed you the cracks that have emerged. And then we have this. You've got, number one, the power prices that are already too high, and based on what we can see here, are set to go even higher. They want to go renewable, but we know that trillions of dollars need to be invested in order to get there. And then, of course, is it sustainable in the way that they have projected? But one thing I want to note here, which will bring us into the last part, thriving and prospering. Well, this right here is something that you need to understand. If the government is going to put billions and trillions of dollars into something, if we follow that, if we follow the money, we're going to see where, regardless of recession, regardless of a downturn, regardless of any problems that we may experience, the money's still going to be spent. And so that's what we have. We got these lobbying groups. We say, oh, we're going to have our friends that are in positions of power do this task or that task. And that's just the way it works. So you got to follow the money and understand where the trillions are going. And certainly it is a lot of this going to renewable energy, whether you like it or not. You don't have to agree with it. This is what's happening. So I want to talk to you about something here as we move into it. Look, I'm not vouching for this at all. I don't know enough about this, but I just want to show you something. The first ETF offering protection against 100% of stock losses just launched. We've seen this kind of thing before, and it's part of what I'll talk about in a sec, which is risk parity. Innovator Capital Management launched a buffer ETF with 100 downside protection. This is the ticker TJUL, and we'll track the S&P 500 over a 2-year period. Okay, so right there, I mean, I think it's important to look at these type of things of risk parity, and that is part of what we're talking about. You got to include risk parity in your overall portfolio. You've got examples, case studies. Hey, we got the Ray Dalio with the all-weather fund. All-weather fund performed very well in 2008, a year where nothing did well. Okay, and so that doesn't mean that your whole portfolio is the all-weather portfolio. That means that part of what's going on inside that portfolio, which is basically fixed income, that's like bonds. It's got gold, it's got commodities, it's got, you know, all different stocks, it's got everything, currencies, everything. And basically, when things start to dip down, that part of your portfolio is still going up. Maybe not very well, but it is still going up. So you don't lose as much, you know, compared to if you were just all invested in the S&P 500, for instance. Okay, so that's one thing, one big thing. Then we've got holding assets that don't have dips. You know, in the art world, there is no such thing as a dip. That doesn't exist. You've got other things, real assets, just in general, real assets is very, very important. You've got working for a company or selling a product or service that does reasonably well in a recession. So if you are in a, let's just say as an investor, you hold on to a company that, you know, they sell, let's just say cleaning supplies. You still need cleaning supplies during a recession. You still need household items during a recession. So those companies generally fare better than, you know, something that is not really necessary and people start cutting back on. You don't want to invest in the restaurant industry or the movie industry at a time in which you have a crisis. Do you see what I'm saying here? These are the steps we got to take. We got to reassess and really ultimately be smarter with where our money is. I hope that that was of some value to you. I want to cover the comment of the day. I think focusing on solutions is really important. We can hear bad news day in and day out to the point that we start to tune it out. Providing a course of action makes people feel like there is a way forward. Thank you for your work. I want to thank you, Katie Common, very much for that comment. And basically what I was talking about here was the changes that I'm going to be implementing and kind of just did or have been over the last little while. Overwhelmingly, people seem that this is something that they want to see. They want to see more solutions, but not just as I've described it right here. I'm going to show you. I'm going to give you the numbers. That's going to come. And I want you to stay tuned for that. If you appreciate it, definitely hit that thumbs up. Did you want to communicate to me directly? Did you want to communicate with over 1,000 people that are like-minded? I've got so much information. Wait. I got so much information. It's going to make your head spin. And it's all for free at Discord. Discord is the place right down below. Link is in the description, where we've got over 1,000 people talking every single day back and forth. I've got sections for crypto and real estate and business and learning about self-sufficiency and so much more. It's all there for you. Click the link. I'll see you there.